Good morning and welcome to another edition of the OFX Currency Couch. I'm Matt Richardson, a senior corporate dealer. I'll be giving you a summary of the week's events ahead and also a look back at what drove the direction for the Australian dollar throughout last week. We did see the Aussie dollar jump higher throughout the end of Friday's session and enabled us to bounce off weekly lows around 78.40. The primary catalyst for that was weaker US inflation data, which has thrown into question the ability for the Federal Reserve to raise rates before the end of the year. Softer consumer prices have led the market to now only price in a 40% chance of additional monetary policy action, and it's led to broader US dollar weakness, with the greenback falling against its 10 major currency counterparts. That's helped the Australian dollar bounce off those support levels at 78.40, 78.50, and given the gains we saw through July, we now imagine that we'll see a steadying off and perhaps a consolidated range between 78.30 and 80.40. Catalyst to, or perhaps topside resistance to that, will be driven by geopolitical events, and those are certainly weighing on the Australian dollar at the moment. The war of words between Trump and Pyongyang are forcing investors into safe haven currencies like the Swiss franc and the Japanese yen. Macroeconomic outlook this week is relatively light, but we will be looking to the RBA minutes as well as US Federal Reserve minutes and our own local employment data for direction, and perhaps guidance into the end of this week is see if we can push beyond this 79 handle we've opened at this morning. If you'd like any further advice or direction, please feel free to call both our corporate and private dealing teams, and our dedicated staff will be more than happy to help.